Good afternoon, guys. Let's have a look at the US markets. Well, you can see the strong day that S&P had yesterday. We still really have to take out this high here, and that's coming at 3950, and we want to close above it. But look, this here, okay, the top of our trend line today comes in at this area here, which is 39.68. So if we close above 50, you've got 39.68, and then you're on to something else. Obviously, if the market moves much beyond that 39.68, you'll be looking at the big one, 4,000, and our 61.8 fib extension at 4013. So we have to really be careful with these, really. Also, what helps us on our way in times like this is pivot point analysis. I mean, it really comes in handy. Today's daily pivot is at 39.04. We're trading at 39.23. What can we see? The midpoint between the daily pivot and R1 is at 39.26. So we've already been and trading on our highs. If we take out 39.26, we go for the next level, the R1, 39.49. Now, obviously this ties in with our 50 level up here. So you've got your fib extension, you've got a prior high, and you've also now got the R1 based on yesterday's price action. So we can use our pivot points to project moves. If you look at the midpoint between the R1 and the R2, that comes in at 39.61. We know 39.68 is the top of our channel line, so that ties in nicely. The R2, 39.73. The midpoint between the R2 and R3, 4007. That is around about the 61.8 fib extension at 4013. So, as I've said, these are really, really good when you're looking at projected upside targets. Now, obviously, if the market has a little hissy fit and retraces, that's great. We know where the retracements are. We can see that you've got support from that daily pivot and the weekly pivot. The weekly pivot's coming in at 39.14. A daily pivot is coming in at 39.04. So we know we've got a cushion. We also know that our midpoint line comes in just under the daily pivot at 39.01. Down to 38.96. You've got to give it a bit on that downside. So we know the downside projections. We know that the 9-day moving average is at 39.14. What happens if we start to tank? We've got that 21-day moving average that's coming in at 38.72. That also is coinciding with the 38.2 previous projected Fibonacci extension at 38.73. Obviously, I have to give you downside targets, as in 2 days this has done quite a bit. But the downside target of the baseline of this channel is coming in at 38.33. And look at Tuesday's action when the low was 38.05. Did you see what I mean? You've really got to be on the ball, because this is up and down and up and down and all over the place. But anyway, that is the S&P. Now we're going to take a look at the Dow. Now the Dow has broken up. Obviously, it broke up yesterday, and the daily pivot on the Dow today is 31797. So what do we have to go for? What do we have to do? We've already broke above the 50% fib extension. I will rejig these if needed. You've got the 61.8 coming in at 32.310. So again, we go back to our pivot point analysis. Pivot point 31.797. Where are we trading at the moment? 31.957. Have we got anywhere around there? Yes, we have the midpoint coming in at 31,985. The R1 coming in at 32,173. Okay, so you can see that you've got resistance all the way up from these pivot point analysis. You've got that 61.8 fib extension coming in at 32310. I've got the R2 at 32385. I've sent these to you. I've put them on the group chat. So please look at them and look at what I'm looking at on the daily charts. Okay? So if you can do that, and I'm squidging this up so you can see it, you can see that we do have resistance from these fib extensions. The only way that we are going to get resistance when you go into all-time highs is on this Fibonacci extensions and pivot point analysis. Yes, we can draw in lines, but you know, this has broken through them all. So you do look to the mechanical, I don't know if that's the right word, mechanical, methodical, mathematically calculated price on previous day's action. We had a big day in the Dow yesterday, so we expect a big range today, or the pivot points do. But look at them, you know, as I say, I post them for you. Look at them because they really do help. Now I'll take a look at the Nasdaq briefly. Now I've been looking at the Nasdaq for quite some time. If you look at what the Nasdaq was doing, it could not break above here. Couldn't do it. All right. Now this move could be seeing a dead cat bounce. Look, we traded really wildly on the 23rd. We really did. We closed up. We closed above the 55-day moving average, and we closed above this cluster here of Fibonacci extensions. We did. I'm going to take that one off, I think, because I'm getting confused. There we go. So the moving averages have converged, or nearly converged. They're at 13,498 and 13,465. Look, however, at the stochastics. They have turned bullish. So if we can go above 13,304, right, we're in with a chance of getting back towards those moving averages. And that's all, as well as that fib extension that's coming in at 13,505. So it's up here. Now, with the Dow making new highs and the technical stocks not, and the S&P not, you have to ask yourself, is this move going to be sustained across the other stock markets? Is it going to be sustained in the S&P and the Dow? The NAS normally shows the way. All right, but the NAS is a bit confusing at the moment because you've got like bullish stochastics and not so bullish price action and not so great moving averages. So you really do need to take a big step back and look at what this is telling us. Do I expect the tech stocks to fall out of bed? Probably not, but they're not looking brilliant at the moment in comparison to the S&P and the Dow. Watch them because they really do tell you a story. Now, good luck, and I will catch you all